Business Unusual right here on Newsroom Africa, channel 405. We continue with our top business stories and the stories that are making headlines and I guess have tongues wagging in the marketplace on this Wednesday. I'm in conversation with the CEO at Cartesian Capital, Anthea Gardner. And Anthea, one of the interesting stories for me that has come out today is that warning on the part of Exponents there, saying that they're warning of a full-year loss and a delay in their results. And every time we hear of a company delaying their results, it certainly gets people riled up in the marketplace.
Absolutely. You've hit the nail on the head. It's just happened in South Africa too often, hasn't it?
Yeah.
Where results have been delayed. And we're still waiting for
Blue Label.
and exactly.
Yeah.
Right. So in Exponents' case, though, which is a financial holding company, and you know there used to be John Daniels Holdings from way back in the day. So when I started in the market, I remember that. And then they got taken over, or John Daniels converted their debt to equity and it became Exponent, and that's how it is. So the reason they're delaying their results, firstly, is that they're buying into a company called MyBucks SA, which is a German company.
Okay.
And it's also an insurance company, so we were just talking insurance, in fact. And what they're hoping to do, this MyBucks business, is bring an insurance platform to South Africa. In fact, I think they've in fact called it insurance platform or something quite simplistic. I know, very original. Yes. And so they're waiting for MyBucks' results before they publish their results, because the deal's pretty much done, I think, and that's what it is. The loss is a bit of a shock. It's just over 6.5 cents per share loss when the share is actually trading at 14 cents. You know, so it's very close to half the share price, the loss. So I guess that's a bit worrying. And the transaction itself is worth 450 million rand, if you convert the euros, whatever the euros are. So not a great result. Small cap company, you know, they offer financial services locally and in South Africa and in Africa. But I guess I'm hoping that it's just because MyBucks still have to report that they're delaying their results.
Yeah. So I guess a temporary pain there for many shareholders who might be holding that particular stock. And when more information comes to light, we could potentially see an outcome different to what we've seen in the marketplace.
Indeed, yeah. I mean, headline earnings per share loss, or the headline earnings per share is down 195%. That's a big shock to the system, but hopefully it's explainable.
Yeah. Let's talk just about the impact of a big geopolitical debate that's happening in the United States at the moment, and that is the proceedings around impeachment that are hovering around U.S. President Donald Trump. And this is because of allegations of him getting assistance from the Ukraine to discredit and smear Joe Biden. Here, let's talk about that and the impact that that has had on the marketplace. We did see historically something similar around the 90s with Bill Clinton as well, and there was a big fallout in the marketplace after that happened.
Indeed. So the S&P declined, it had its biggest decline in a month yesterday, you know, while we were celebrating Heritage Day. And as you say, I mean, you put it quite nicely, actually. You said allegations around him getting help from the Ukrainian head of state. But actually, I read an article that said he was bullying the Ukrainian head of state into finding something on Joe Biden. You know, words, I suppose.
Well, assistance, you know, is it voluntary assistance? Is it coerced assistance?
Exactly.
Assistance is assistance.
And then, as you say, I mean, he's not the first president of the U.S. to have impeachment against him. I mean, Barack Obama had, and Bill Clinton as well, but he resigned before actual impeachment, so there's another story. Sure. And then the obvious one, of course, is Richard Nixon. And there's a list of them. There's also John Tyler. There's so many of them that actually it'll be interesting to see how this plays out. And I feel like part of me says that it's a bit of politicking. You know, so it's almost a given that President Trump is going to win the next election, but his closest runner-up is Joe Biden, and so he starts this sort of thing. And then Nancy Pelosi says, well, actually, this is out of order. You know, we need to sort this out and keep you on the straight and narrow. Unfortunately, it does impact markets quite negatively. You know, it's very similar to what's happening in the UK, in fact, with Boris Johnson, and what happened yesterday as well with him, with the court saying that him suspending Parliament or advising the Queen to suspend Parliament was unlawful. And I think what happens is it takes the eye off the ball of the economy. It takes kind of the governing party's eye off the ball when it comes to actually running the country and doing what's right for the country. And I guess it's an international problem, right?
Let's talk just briefly about the impact it's had on developed country equities markets and even the currency. We saw the South African rand in early trade today strengthening against the US dollar. And similarly, the British pound as well was much stronger against the greenback in early trade this morning. If indeed a lot of those tensions continue and they back Donald Trump into a corner, as some people have, I guess, speculated, will it influence his negotiating stance in that sort of trade impasse between Beijing and Washington?
That's an interesting question because I think both Trump and Johnson are quite, they've got like a lot of bravado about them, you know. So should they resign? Do they? A lot, yes. And should they resign? Would they feel like they need to back down? I'm not sure they're of that ilk. I think they're quite brash and bold. And the other problem, of course, is all of this comes on top of so many other geopolitical issues. You know, it's the China-US trade deal, which, quite frankly, has been going on for a year already. I can't believe it's been a year already. But it's an accumulation of all these things that are happening that is putting pressure on markets. And markets don't know what to do or where they're going. And, of course, we're not sure if China's growth is slowing down. And so traders or investors are kind of sitting on their hands and saying, well, I'm not really sure. You know, do I really want to be invested in the local currency or in the local equity market? Probably not, because the downside risk is actually just too high.
What does that mean for safe haven assets like gold, and more importantly, with all of the tensions and political risk, and we seldom say this, right? Political risk happening in the global north. What does it mean for us here as emerging market economies and equities and other asset classes in places like South Africa?
So gold, in fact, as you say, is a safe haven metal, and of course we're one of the biggest producers, if not the biggest. Or I stand corrected, but we're close enough. And so you've seen, obviously, the gold rally. It's already rallied. Kind of people have already gone into it. And I was looking at the futures, the open contracts in gold a couple of weeks ago, and they're probably higher than they were 2008, 2009. So already we're at that kind of peak gold buying phase historically.
Which is often associated with global downturns.
Exactly. Right? And so the next question is where to from here? We've already seen the US yield curve invert. So we've got a couple of things happening that make me very nervous. Where does that leave us? I mean, you know that in 2008, 2009, we were probably fairly, relatively resistant, or resilient, I should say, compared to other markets, you know, like in the US, where it fell 40% in a couple of months. We kind of held our own. Things are different this time. I think in South Africa this time, we've got other big issues that we worry about. We've got huge debt, we've got failing SOEs, and that could be more our problem this time than we might not be able to hold on like we did in 2009.
Well, it seems that in spite of those conditions, that many of the sovereign bonds that we're floating continue to generate a lot of interest from global investors. And a lot of that might have to do with all of this uncertainty in the global north, because we saw yesterday information coming out of the National Treasury that a Euro bond that they had floated there was overly subscribed. And the big question is what clues and more importantly, what insights does that give us about the appetite of the investor community to buy South African debt?
I'm not sure if you can call it appetite to buy South African debt as in the search for yield. And you know, so South Africa, sure, it's great from an investor, global investor point of view, because we're a very liquid country.
Yes.
So, or markets, I should say. So we're one of the most liquid currencies, or one of the most liquid stock markets, bond markets. And so, of course, they're going to buy when they can. I mean, so the 10-year debt closed at 4.85% yield, the 30-year at 5.75%. Now, you compare that to other government bonds, it's a huge discrepancy, right? And I was trying to compare it to some of the other emerging market yields, and it's difficult to say. In fact, so we're probably closer to Brazil is the one you want to compare it to. And we're not perfectly priced, should I say. But no doubt investors are looking for yield and for liquidity should anything happen so that they can sell off just in case. I mean, but if you compare it to kind of the developed world, you know, EDF, which is the French electricity utilities, trading at 0.5 and 1.6 compared to our 4.85 and 5.75. So which do you want? You know, they're buying dollars. They're not buying South African rands, so it's easier. They don't have to worry about hedging out the rand component. Sure. All they have to worry about is whether or not we're going to repay that debt. And I think the general feeling even though we've been downgraded by S&P and Fitch, is that we're still okay from a gross debt to revenue perspective. And of course, Moody's is the one saying, well, we're watching you, but for now we think you're okay. Sure. And just watch those debt levels. And I think that's what it was all about. The great thing about it being oversubscribed, because almost 3 times oversubscribed, is that government took on an extra $1 billion of debt, and so they don't necessarily have to use it, but they've got it there, and perhaps you might see next year's issuance or bond issuance being reduced. And I think they had penciled in 3 billion and now, or 4 billion, and now they only need to raise 3 or 2, whatever it is.
What does that mean for Finance Minister Tito Mboweni as he goes to his medium-term budget policy statement? He has already flagged in his budget speech the borrowing requirements that you've just referred to, but it must be a speck of good news in a tough economic environment to be able to say, hey, global investor community continues to be interested in our sovereign debt, and it's even given us enough leeway, R1 billion strong leeway, for us to be able to say, hey, in the next year around, we can signal to the investor community and the ratings agencies that we don't have to borrow as much as we planned.
I think it's the other way around, actually. So the ratings agencies are looking at us going, you need to keep your borrowing in check, so don't borrow more than you need to, actually. So that's really more the issue that I would worry about going into the medium-term budget speech. So partly it's nice that global investors are prepared to invest in South Africa, but on the other side, we really do need to be a bit more careful of those debt levels.
Last one before I let you go. Sibanye-Stillwater, we know they took over Lonmin not too long ago, and one of the conditions there was that there would be a moratorium on retrenchments right up until December. But Neil Froneman and co. have indicated that post-December, 5,270 jobs, bulk of which are permanent jobs, said to be lost in the economy, and it, I guess, contributes to many Section 189 notices that have been floating around.
Unfortunately, yes. I think Neil's got a tough job. He expanded very quickly. He expanded offshore and more into platinum as well as gold. And so now he's trying to figure out where exactly he needs to be and how he needs to make all of this work for him. And unfortunately, if there's no market, then there's not much that the companies can do. It's not great for South Africa with an unemployment rate that we're sitting at. But it's that or the company goes under. It's such a difficult, it's a very difficult one to kind of sit here and talk about. And you're tempted to say, well, okay, so there's a moratorium.
The price environment is good, Anthea. I mean, one would think that you wouldn't be slashing jobs in the platinum sector with good prices for rhodium, palladium, and even platinum.
But it's about expenses, and it's about where you earn your revenue and where you earn your most earnings, right? So South Africa, even though we think miners earn very little, and let's be honest, they do, I think labor in South Africa and extra costs in South Africa are quite high compared to other places in the world. And so if he's going offshore and wants to make the other companies work more efficiently or produce higher profit margins, then of course he's going to look for expenses to cut. And unfortunately, it seems that's the decision he's taken.
Okay. Anthea, we'll have to leave it there. Really appreciate you taking time out to speak to us. That there was the Chief Executive Officer at Cartesian Capital, Anthea Gardner, giving us a wrap of our top business stories that are moving markets and have tongues wagging in the marketplace this afternoon.